Let's bring in Dan Niles, founder and portfolio manager for Niles Investment Management. Dan, good to have you. Welcome back.
My pleasure, Carl.
Is there reason to worry about market structure and supply-demand imbalance once SpaceX hits?
Yeah, I mean, I think there definitely is. I mean, it looks like money is infinite right now, but you never know until you get there. And I think between SpaceX, which, this Friday raises $75 billion or so, and then you've got Anthropic and OpenAI, and you combine them all, it's $200 billion probably in that range, and they're probably coming in the fall, at least Anthropic is. You are going to have portfolio managers, especially because these names can get added to some of the indexes immediately, where they're going to end up having these passive flows into these names out of some of the other mega cap tech names to fund it. So it's going to be a lot of interesting movements. I'm very curious to see the fallout of SpaceX. I'm more on the side of, given where that's priced at, which is 90 times revenues or so, somewhere around there, and given how big it's going to be, I think the impact's going to be somewhat negative. But we'll have to see what happens. Maybe people get really bulled up, and it doubles the first day, and we end up with some more froth in the market, so that can also happen.
Where are you right now on chips? Of course, your old neighborhood as an analyst, and today again, software versus semis all-time low.
Yeah, I mean, I think Sarah had some great charts that she put up, right, talking about how you're investing as much as you did during the railroads. But the thing is, there's a reason Anthropic, for example, is coming public, right? You look at it and you say, well, they did $1 billion in annualized revenue run rate beginning of last year. That went to $9 billion at the start of this year, and now it's at $47 billion. And they turned profitable. They weren't supposed to get to profitability till 2028. So you go, all right, well, all of that money is going to be funneled into infrastructure, which goes right back to chips. And as Sarah pointed out with some of those other charts earlier, there's shortages in there that are going to continue for the next couple of years. So I think now the bottlenecks have switched, right? You've got CPU bottlenecks now, which is why you've seen, Intel up over 200% versus an NVIDIA that's up like 20% or so. And so the bottlenecks are going to keep switching, but the physical infrastructure is where all of this money is being spent, including Google that raised $85 billion recently, right?
So does OpenAI and Anthropic as stocks not interest you on the public market?
Well, Anthropic interests me because I've been saying this for a while, right? You only have a certain number of winners. I mean, if you think about it, you go, well, who's the winner in search? That's just Google. What about in e-commerce? That's just Amazon. Are you going to have 5 different guys win in AI? No. I think Google wins in consumer. They have the complete stack. I think they win in AI overall. But then in corporate, you have Anthropic, which, as I said earlier, they got to profitability in Q2, and their revenues are ramping like nothing we've ever seen in history for a company of that size. I think OpenAI is stuck between the two of them. So for me, those are the two winners. I think OpenAI's got the problem because they're jammed between the other two guys. And, that's kind of how I'm thinking about things going forward.